Good morning, everybody, and we'll get started here in a second. Everyone, we'll get started here in a second. A lot of people come in. I didn't make an announcement, so we'll just see if people trickle in. I need to prepare something real quick, swing trading updates real quick. We go, it is rich. Someone in the comments wanted Tesla, so there you go. Damn it. Oh, shit. Whatever. All right, we can get going here. Probably got enough people trickling in. All right, starting what we always do, right? Market trend model. First off, can someone let me know if you can hear me or not? That'd be useful. Market trend model, right? Continuation day yesterday, above the ribbons, above all the ribbons, looks good here. Really not a ton else to say. Sir, after this, 2 kind of day ramp, maybe we see a consolidation, a little bit of pullback, completely normal. But, in terms of our P-Transit plus GEX mechanical strategy, in terms of our wheel strategy, which the bullish momentum signal is a key gate, everything looks fine right now. So really not too much else to say there right now. So yeah, really not a ton else to say there. SPXA looks fine. Remember that expiration is coming up. Be next Friday. So just pay attention to that. The one thing we want to know is our true zeros. This gamma line, right, is pretty flat right now generally in trending markets. If you go, run this chart on the last 200 days, you'll see, it's trending higher when we get nice price movements higher. Right now, it's just been consolidating sideways, which for the last month and a half, 2 months, we've been consolidating sideways. So that's what we're looking for here. Spot price is on the right side of that line. So, all else is good there. But, market trend model was looking great. This kind of has our dimmer switch coming back down just a little bit, not getting us too excited, which is important. That's why you have different tools, right? Going to SPXA or the SPXP upper quartile analysis. Again, these 10 expirations hold 77% of all speculation in the SPXP complex. Transition zone, top of it right at 69.50. We're above that, so that's fine. Not a ton to say here, but call dominator above the spot price 7,000, kind of the clear topside speculative level right now. Other things to know in terms of sequencing kind of your trades. Today and tomorrow, important days. Thursday, not so much. Friday, an important day. So just be cognizant of that. Keep in mind here, too, when you look at, it's maybe easier just to show you. So here, upper quartile, right, 77%. If we go to the 75% quartile, you can see, expirations out to 223. So between the upper and the lower, right, most of that speculation is happening through 223. So, if you're placing trades further out than that, probably not smart, just because there's not a ton of speculation there. And as Paul, noted, the SPX structure is constantly being overwritten because money is cycling in, money is cycling out, money is repositioning, all that good stuff. So, you don't really want to have it, your thesis built on 3-2 as an example, because that's very likely to change. There's only 29,000 open contracts there right now. So that's all that we're trying to say there. Alpha, we'll get to your question in a minute. So going there. Alpha, there's a lot more to it than just gamma and charm heat maps. I know that's kind of the flavor du jour of the past year, but we look at different things and differently here. So it's for some people, not for some people, but we'll get to that in a second. Here, this is our 3D surface model. It's a summary of our 3D surface models. Again, we're just looking over the next 2 days because as we just saw their upper quartile analysis, those are the expirations that matter in the short term. So we can see, right, looking at charm, 2-to-1 overhead. So it's going to be a bit of a headwind. We can see 7,000 key sensitivity strikes. So you're going to be cognizant of that. Vanna, opportunity for that to be supportive if we see a collapse in volatility, increase in out-of-money call speculation. Going to 0DT structure. You can see the Drunken Taylor range is massive right now. 7,000, top of that, 69.20, bottom of that. You can see yesterday, if you watched our recap video, top of the DS at 69, 35 or 55, I forget, whatever it was, proved a very good level to risk against. That's where we saw a lot of consolidation, then a move through to the top of, or to plus decks on the day, which was, 70 to 80, 69, 70, 80 zone. Sorry, I woke up with a sore throat. But yeah, you just see quite a large range today. Think of these as kind of upper and lower bounds for the day. Alpha stream, to your point, this is where our intraday volume is very important. Gamma only matters if spot price is moving. So if it's not, right, to your point, charm, all that good stuff. We offer charm on the web app right here. You can see we have a net charm, we have a net Vanna, so you can understand kind of what the magnitude of charm is. You can see charm is very heavy in the overhead relative to what we have below spot price. So again, going to be a headwind. You can see where those kind of key sensitivity points in charm are. 7,000 is one, getting up to 70, 45, 70, 50. But again, keep in mind, if we see that intraday volume activity come in like we saw yesterday, where we saw sustained buying all day, that's going to overwhelm charm. So you can't just be focused on gamma and charm, right? You need to be focused on how people are actually transacting during the day, which is something that a lot of folks miss. So can't forget that humans and machines are in the arena actually transacting. That's why we say delta is more important than any other Greek. So just keep that in mind. I'm sure you know that by your questions, but just thought I would reiterate. So again, looking at our net stack command for 0DT. Again, this is for 0DT. I just said that. This is a summary of our 3D surface models. Again, 3D surface models are the big mountain looking things. Big mountain looking charts often confuse a lot of people. So we just simplified this. Have the 4 columns, each of the 4 Greeks. We're call dominated in the right-hand plane. That's good to see. That means Allen money call speculation is dominating above spot price. That's what you want to see. We can see those key sensitivity strikes against 7,000 can be very important. Charm right in the overhead is hurting us, all else equal. Vanna, the potential for that, but we need to see a reduction in volatility and increase in Allen money call speculation. And yeah, if we, again, this right here is this is showing us when we're flipping from put to call dominated below spot price. We know that all call dominated above the spot price is a very, very good condition. If you're bullish, we generally see sideways to higher price action, and to get that to flip to in the money call dominated, basically 7,000. So just be cognizant of that. We got a bunch of different notes on the key levels y'all can look at, but again, just looking at this. Above 69.55, we consider that bullish. That is the top of the DEX transition zone based off of delta. And then, right, you can see the gradient, which think of the gradient is like pushing a boulder up a mountain, right? With that, the peak of the mountain at 7,000. Hence, that's why it's a drunken sailor range. So we need a lot of volume to get us up and over that mountain peak. Right, and then to the downside below 69.40, relatively bearish on the day. And then, 69.20 is the bottom of the drunken sailor zone. So let me know if you guys have any questions on that. We'll take a look back at SPX again. Yeah, so finding support kind of right down there at the top of our DEX transition zone at 69.55. I mean, not bad, basically to the penny. So pretty good there. Back at almost highs for the pre-market. Above the opening print. Let's see if we can get above prior day high. Be constructed to see. So if nothing there. You can go look at some swing trade stuff if y'all want to. So I'm just checking something real quick. All right, SPX, making new highs for the session. Good to see. Yeah, we can look at PLTR. $142, $134, so close enough. All right, so looking at swing trading stuff, we'll get to Palantir here in a minute. If you guys have been with us for a while, you can see that, right? Generally what we do is we produce this scatter plot for all call dominated stocks. You can do it all put dominated stocks too, right? We're getting that into the web app. So you can see what this looks like, right? I just have the call dominated scan selected right now. 142 stocks return. Have it sorted right from highest to lowest. Distance plus gex, but then what we can do, right, is we can zoom. So, this upper left quadrant, right, like above P trans, below plus gex, that's the most favorable quadrant, based off our P2P methodology. P trans key upside acceleration zone, plus gex kind of key upside target. So we want to be above the upside acceleration zone, but below the profit target. And then, right, just looking for the best risk to reward moves. So like Riot, for example, has 2% downside, 35% upside. Yeah, but I kind of discount those outliers a little bit. And then what we can do is we can zoom in, right, and we can just get kind of granular with what we got. Come on. We'll look at Palantir while that's reloading. Sorry about that. All right, well, never mind. We're back. Right, so looking here like Dell, little downside. By little downside doesn't mean it can't go lower. It just means, less than 1% to P trans, which, we know if we're right or wrong at P trans. So that's kind of a good level to risk against there. Rocket, AMD, ABBV. I don't know what that is. Duolingo. Then we can drill down more if we want to see what stocks we got. Reset the zoom, all that good stuff. So yeah, that's kind of a tool that we're using there. You guys can use that, identify those key stocks that you're looking at and all that good stuff. Palantir specifically, this looks like trash right now. Huge transition zone. Yeah, and really not a ton else to say here. It does not look interesting at all at the moment. We just go pull it up on the chart as well. Yeah, it's just been clobbered. These institutional moving averages that people pay attention to, all trending lower. So sure, we could see a reflexive bounce higher, 50% retrace, but in terms of its structure, it looks pretty awful here. So not very interested in that name. Is that helpful? Yeah, ABBV, I figured that was some pharmaceutical name. I don't really mess with those. Yeah, going to Oracle. Again, not a name that looks very good. Wide transition zone. Can see above spot price. We have put dominated stocks, which is not the condition we see when it's a constructive bullish foundation. Generally, it's call dominated above and below spot price. So we do not see that. Oracle. I mean, from a price action point of view, looking at these institutional moving averages, again, that people pay attention to, whether you believe in that stuff or not, kind of irrelevant. A lot of people do, so it's worth your time probably tracking that as well. You can see that those are all trending lower. Maybe by coincidence or not, price is unable to get above these levels. So again, not very interesting. Maybe we get a reflexive bounce. Maybe you like just catching falling knives. I'm not sure. Not saying you specifically, Alpha, that asked the question. That's just more of a general statement. Come on, dude. But yeah, again, Oracle doesn't look very attractive here. So SPX kind of flirting with prior day highs right now, not doing much there. And again, Alpha, just another way to look at your question. Alpha, you still here? Still with us? Well, anyways, I don't know if Alpha's here or not, but kind of a good lesson. Using our GEX ratio, which is a ratio of nothing like using the term with the definition, right? The GEX ratio is a measure of cumulative call gamma relative to cumulative put gamma in the structure. So think of that as like a put call ratio, but it's better because gamma is the main factor, and that is time based. Traditional put call ratio is not time based. So gamma is most sensitive in the short term, which is us traders. That's what we care about. And we see the trend, right? The dashed line is the ratio. It's just been trending lower for like ever. This is a look back of 150 days. So we can see, right, when we started to just get this downtrend, speculation has left the name, right? We're below 1, so there's more put than call gamma. Sure, it's trying to trend up a little bit here, but, still relative to the range, it's on the lower part of the range. Just not seeing any evidence of really call speculation coming in the name right now. So just another tool that we have to look at that, but, strictly from levels, structure, all that good stuff. And Oracle doesn't look very interesting. Is that helpful? Does that answer your question? So looking at the market trend model right now, no filter tick coming in. 52-week highs well outpacing new lows, so that's good to see. Let's look at our volume, intraday volume commands for a moment. Fairly flat right now. Keep in mind we have the put centroids 45-degree angle higher. We've talked about that a bunch. This is generally a signature where we're not going to see a material collapse in price unless we see a news event or something like that. But all signs right now are kind of a sideways to higher action right now. Yes, I know that the call centroid is moving flat, but that's going to resolve itself as we progress throughout the day. What's most important right now is just understanding what the put centroid is doing here. So yeah, moving through prior day highs now. Yeah, let's look at Mag 7 real quick. What the hell? Yeah, so you have Amazon holding P-Trans right now. Why the hell hell is it doing that? It's so annoying when it does that. Yeah, so I mean, you got Apple. Apple's flirting right at P trends. Let's see if we can get a move above that. That'd be constructive for the market overall. Nvidia, a bit of a weakness, unable to get above P trends. Microsoft, above pre-market highs. Palantir just looks like garbage. Meta unable to get above P trends. So yeah, kind of a mixed bag right now. Yeah, Bitcoin still looks pretty bad here. Alpha, your questions do. We do a ton of 0DT stuff here, and then we also have swing as well because, options market analysis is fractal. So what applies on one time frame applies on another, and, one instrument, you can apply it to the other instrument as well. Obviously, SPX is a little bit unique. So our intraday volume analysis generally is just tailored towards SPX, because it's cash settled index, all that good stuff. But your questions are not out of line by any means. Hence, the majority of the time we spend here is focused on, SPX and 5-minute chart. So all good. All right, y'all got any other questions? If not, we can end it there. Let's take a look at some other names. Yeah, I mean, Riot doesn't look awful here. See if they can hold 15. I mean, it's kind of this whole thing here is not very inspiring. Like, doesn't really suggest it's going to be trending. So just keep that in mind. Dell. Yeah, we went over analysis. We already went over a Tesla Alpha. I'll come back to in a minute. I've moved on. Dell, Dell looks fine too. Above transition. Yeah, 140 is kind of where folks are piling in. So that name looks pretty good. Let's see what it looks like on the chart. It's got earnings at the end of the month. It's kind of the only bummer. So yeah, we got Dell, you got AMD, you got Rocket, AMAC, Goldman Sachs. So yeah, just play. Yeah, so that's just how I would use scatter plot. Yeah, Tesla looks fine here. right? It's above transition, 450. Here we're just looking at the upper quartile, right? 70, 69, 70% of the speculation. I mean, looks fine here above transition, which is around 412.50. 450 kind of upside target right now. So yeah, Tesla looks fine here from kind of positioning standpoint. Looking at the price chart. I mean, the price chart isn't great. If you're stuck on that, it doesn't look very good. But yeah, it's above P-Trans. So I mean, if you're looking to build a position, start in early, then here's not a bad spot. Kind of the point of why we do options market analysis with kind of traditional price action stuff, right? Is because this doesn't tell you what's happening under the hood, but this does. Continuing to look at our intraday volume analysis, we're starting to see the call centroids trending higher, put centroids still trending higher as well. So this is a constructive looking kind of intraday market analysis that we're looking at right now. Sorry. Does that make sense? Then looking here, right, speculation is kind of topping out around 69.90 for the moment. So just pay attention to that. Again, this is just a break. This is just kind of a more granular view of our centroids, what we're looking at here. And again, if you guys are not familiar with this, I'd encourage you to go watch last week's open mic. Go watch kind of our recap videos. I'm not going to explain it all here, which I know that kind of sucks for people not familiar with it. But we have resources on the YouTube channel, so you guys can go watch that. Or GameEdge.us, go to free courses, GameEdge FastPass. This is not a course, right? This is our entire education platform given away for free to you. It's exactly what the paid members get. So our tools, our framework, strategies, kind of the methodology, all that good stuff. So it's in here. Yes, it's going to take a little bit of reading, a little bit of watching some videos. It's going to take some time, but if anything we've talked about today maybe piques your interest, then you can do a deep dive in that. So again, GameEdge.us, sign up. It's all free, and yeah, not a ton else to say there. So with that, I'm going to go back to staring at the tick by tick of the SPX, and I hope that you all have a good day, and we will talk later. So thank you.